Hi everyone, welcome to Ask a Property Manager episode number 41. Today is October 7th, 2020, and I'm coming to you from the Own Buffalo studios here in Buffalo, New York. I'm Andrew Schultz, principal broker of Own Buffalo Inc., and on today's show we're going to be looking at mortgage forbearance and refinance rates, and we're also going to be looking at how to do a proper condition report for a move-in inspection, and then we're going to answer some questions from housing providers around the country. Before we jump into that, we're going to plug our social media. New episodes of Ask a Property Manager come out every Wednesday, 10 a.m. Eastern. You can find those live on our Facebook page at facebook.com/Buffalo Foreclosed Homes. You can also find replays the same day on Facebook as well as over on our YouTube channel, youtube.com/OwnBuffalo. Don't forget to check out our Instagram over at instagram.com/OwnBuffalo. Go figure. Last but not least, don't forget that you can grab a free 30-minute phone consultation or Zoom consultation with me over at ownbuffalo.com as well. I do have a couple of time slots available for this week. I have a couple of time slots available for next week as well. Not quite as many as what we normally have open. We've got some stuff going on in the background that's taking some of my time up. But definitely still some opportunities there for you to jump in and pick my brain a little bit. And actually, I had one of those calls earlier this week, end of last week maybe it was, and the guy was shocked that there was no sales pitch at the end of it. And there's not a sales pitch at the end of it. It's purely just a 30-minute phone call. Honestly, I don't really have anything to sell at the end of the 30-minute phone call. If you're not in my market, chances are you're not buying in our market, you're not taking property management in our market, so those are our main service offerings. I don't charge, I'm not a consultant or something like that, so it's purely a 30-minute phone call. If you have questions you don't want to ask in a comment section, reach out, get on my calendar, I'll do what I can to try to help you out. New episodes of the Rent Prep for Landlords podcast drop every Thursday morning, so our next episode comes out tomorrow. This coming week's episode, we're going to be looking at whether or not you should renew a lease with a bad tenant, what to do if you inherit tenants when you purchase a property, and then we're going to look at some bad tenant stories over there as well. So don't miss out on that. New episodes drop every Thursday morning over at rentprep.com/podcast or anywhere podcasts are heard. We're going to jump over to our first news article of the day here. And both of our articles today come from CNBC. They were both published by Diana Olick. The first one was published last Friday, October 2nd. The second one was published today. I just want to kind of look at these two articles and talk about what's happening in the market. Title of the article, number of mortgages in coronavirus bailout program jumps 21,000 after declining for 6 straight weeks. The number of mortgages in active pandemic-related bailout plans rose by 21,000 in the past week after declining for 6 straight weeks, according to Black Knight, a mortgage technology and analytics firm. The increase was not across all mortgage types, but among bank-held and private-labeled security loans, and to a lesser extent, FHA VA loans. Those increases were offset by a decline of 9,000 Fannie Mae and Freddie Mac loans in forbearance. Into the article now. The government and private sector forbearance programs initiated at the start of the pandemic allowed borrowers to delay their monthly payments for at least 3 months and up to a year. That actually, there's differences in the length of forbearance time based on if it's residential property, single family, or whether it's considered a multifamily. So there were some differences there. Let's see here. Jumping back in. Forbearance is granted in 3-month terms, and so far more than 75% of borrowers in the bailouts are on extension since March. That makes sense. As of September 29th, nearly 800,000 forbearance plans were still set to expire in September, down from 2 million at the start of the month. That's good data. The data is still coming in, but over the past week, we've seen roughly 80% extension rate. So that essentially means that the plans that are still out there, of the 2 million, you've got 800 that are still out there. So you got 1.2 million. It sounds like most of those, about 80% of those extended their forbearance rights. So given that there are another million plans for which October marks the last payment covered by forbearance, we should expect to see heightened levels of expiration extension activity in the coming weeks. As of Tuesday, roughly 3.6 million homeowners remain in pandemic-related forbearance plans. That's 6.8% of all active mortgages, representing $751 billion in unpaid principal. That's a huge number. 6.8% of all active mortgages across the country right now are in some sort of a forbearance plan. That's not an insignificant number. I'm actually going to skip ahead a little bit here. By loan type, 4.7% of all Fannie and Freddie-backed loans are in forbearance, while 11.2% of all FHA VA loans are. For private label and bank-held notes, that share is 7.3%. And I want to pick at this 11.2% FHA and VA number for a second. And the reason I say that is because if you look at last week's episode, I believe it was last week's episode, we talked a little bit about what happens if the market shifts and property values go down. If you have 11.2% of all FHA and VA loans in forbearance, if any of those loans are early on in the loan process, in the repayment process, that year 1, year 2, these loans are underwater. Their house is, they're basically in a situation, I shouldn't say their loans are underwater. If property values dip, they're underwater. And you can go back to last week's episode and see what I mean when I say that. But it definitely concerns me that 11.2% of all FHA and VA loans are currently in forbearance. Those are the types of loans, FHA is a 3.5% down payment in most instances. VA loans are going to be a 0% down payment in most instances. Those low down payment options that some people are relying on to get into properties, they could be the thing that sinks them in the long run. So I wanted to touch on that article before I jumped over to the next article. This article talks about number of people who are still on bailout programs and things like that. And keep in mind that at the end of that forbearance, they still need to do something to get caught up. And that's where this next article comes in. Mortgage rates set another record low, sparking new strength in refinances. Most of those people who are in forbearance right now are going to wind up going through some kind of a loan remodification or a refinance at the end of their forbearance period to get themselves back on track. The nice thing is the mortgage rates are historically low right now, which makes it super inviting to want to do a refinance as long as you're in a position where you're able to do so. Mortgage rates moved even lower last week after setting multiple record lows in recent months, spurring more borrowers to call their lenders and apply for a refinance, but homeowners were not quite as motivated. The average contract interest rate for 30-year fixed-rate mortgages, conforming loan balances up to $510,000, slipped to 3.01 from 3.05%, while points decreased 0.37 from 0.52 with a 20% down payment. So that's a conventional mortgage. You're looking at about a 3% interest rate. Scrolling down a little bit, applications for a mortgage to purchase a home. So this is the initial mortgage, not a refinance. Fell 2% for the week, but were 21% higher than a year ago, which is kind of what we're seeing in our market here. While the annual comparison is strong, purchase volume has been falling little by little. It is now down just over 4% from 4 weeks ago. There are signs that the demand is waning at the entry-level portion of the market because of supply and affordability hurdles, as well as the adverse economic impact the pandemic is having on hourly workers and low to moderate income households. As a result, lower price tiers are seeing slower growth, which is contributing to the rising trend in average loan balances. So it's interesting that it specifically mentions the supply and affordability, because that's an issue that we're having here in the Buffalo market for sure. There's definitely not enough inventory in the market. It's been a seller's market here for a while. I have a feeling that it'll probably continue to be a seller's market for at least the next period of time here. And it's an affordability issue, and it's a supply issue. The prices in Buffalo are climbing just like they are in a lot of markets, and it does create an affordability issue in a city that is not particularly wealthy. We consistently rank, the Western New York market consistently ranks on one of the more low-income markets when you look at the national averages and things like that. It's something to think about. So there's definitely, I have a feeling that most of the people who are in these bailout programs are going to wind up into some kind of a refinance, which is worth noting. It's definitely something that's worth talking about, and I don't think that it's something that's going to go away. I think that you're going to continue to see some people doing refinances as they come out of these forbearances. I believe last week we had talked about eventually the refinances will start to dry up. Once we get to that point, there'll be a whole new round of people who are looking to refinance. I don't think that it's going to go away anytime soon. It might slow down as people start to move out of their forbearance and refinance their own mortgages. You might see a slowdown, but I think that there's going to be quite a bit of refinancing going on for the foreseeable future. We're going to go ahead and jump into our housing provider questions. And this first one's a little bit longer. And it deals with service pets and lease violations. So we'll go ahead and read through here. I've been a landlord for 40 years now, and there's always something new. All of my rentals are no pets. I have a tenant of 8 months who informed me that his parents' home burned down, so he needed to move to a bigger space so that he could care for them and their 3 dogs. I told him I understood, so he could break the lease with just a 1-month notice. Never heard anything else about him moving out. When my husband/handyman had a repair job on the apartment across from him, he found out that the parents and the 3 dogs were now living in the apartment with him and his wife. He said he thought I understood that they were going to be living with him. I referred him to his lease that says any new tenants had to be added to the lease, and not only that, my lease says you cannot have a pet, babysit a pet, or have company with a pet. All very clear. I told him the dogs had to go. Yesterday he comes by with the doctor's prescription for a service dog for his wife. The dog was the parent's dog, and the doctor said this was essential for her mental health. The doctor saw her for the first time a month ago. The dog has already chewed the front door knob off. Any advice? You have quite the sticky wicket here. We're going to have to pull this apart piece by piece. You got multiple issues here. First issue is you have essentially unauthorized guests living in the property in the form of the parents. You also have unauthorized animals in the form of the parents' dogs. So you have 2 separate lease violations right there. The first thing I would do is issue proper lease violation notices to the tenant using whatever requirements are in your state so that the tenant is on notice that, number 1, they are in violation of their lease, number 2, how they're in violation of their lease, and number 3, the time frame in which they need to fix the violation before you proceed any further. And you do have to give them a time frame, and it's state-specific type stuff. Look into it, find out what you have to give as a length of time for a lease violation to get that stuff corrected. So the best way to correct this situation, it sounds to me like it's probably going to be a more permanent situation with the parents living in the place. Have them fill out rental applications, have them list the dogs on the rental applications, and then have them fill out, I would go through petscreening.com if you're not familiar with them. I'll see if I can pull up their website here while we are petscreening.com. We'll switch back to desktop here for a second. So pet screening will actually help you to determine whether a dog is a pet, whether an animal is a true pet or whether it's actually a service animal. It's a great website. You know, if it's something that, this is something that you should be looking into. Number 1, if you accept animals in your rentals at all, pet screening is a great way to get a good feel for how the animal is going to behave while it's living in the unit. The tenant has to answer a series of questions, and it builds a profile about the pet. And then if it's a situation where it is a service animal, they help you screen through the service animal questions as well, which could certainly keep you out of some hot water. We'll jump back to the question here. So definitely check out pet screening when it comes to screening down the pets and everything else. Now, moving forward here, we're talking about the animals themselves. So you talk about there being a letter that was written for a service dog for the wife, for the tenant's wife, by the sounds of things. There's a couple different ways of dealing with this situation. So there's differences between service animals and emotional support animals. And it sounds like what you have here is an emotional support animal that was prescribed by a mental health professional. Whether or not that prescription is based in the fact that they are an actual patient or not, that's up to you to work through with pet screening, with the tenants, however you choose to go about doing that. But it does change, you know, it's no longer, there's a difference between a service animal and there's also a difference between an emotional support animal. In terms of housing, it's almost irrelevant because you treat them both the same. You almost treat them like a piece of durable medical equipment, the same as a CPAP or something like that. But the one thing that you do need to know is that the tenant is still responsible for the conduct of that animal, as well as the care of the animal, including making sure that, you know, waste is cleaned up, that the animal's not causing damage, you know, ripping off doorknobs, chewing front doorknobs off. The tenant's responsible for that. It doesn't matter if it's a pet, an emotional support animal, or a service animal. No matter what, the tenant's still responsible for that. They're responsible for the animal while it's on the property. So this is a situation where you've got quite a sticky wicket here. You're going to have to work through it. You might have to consult an attorney to see what you need to do in your state, but definitely jump on it and definitely make sure you're handling this the right way. It sounds to me like somebody's trying to pull the wool over your eyes with possibly a fake emotional support animal certificate. You've got to talk to somebody who can verify that stuff. There have been several episodes of the Rent Prep for Landlords podcast. Actually, we had an episode, Eric and I did an episode with Jamie Kane, who's a real estate attorney here in the Western New York region out of Rochester, talking about emotional support animals and service animals. Definitely look that up. Worth your time to sit and watch that if that's the situation you find yourself in. Next up, we have some appliance repairs. Is a week a reasonable time frame for a dishwasher repair? The dishwasher is just over a year old, so Whirlpool is graciously extending the warranty, but they can't make it out until Wednesday the 14th. If I put myself in the tenant shoes, I'd be a little bit disappointed. That does seem like a long time to go without a dishwasher, but I also wanted it to be handled by the warranty. Do you think that time frame is reasonable? You don't have to have a dishwasher, and the rent is under market value by about $100 a month. But they're the best tenants someone could ask for, so I want to keep them happy. And frankly, if they move, the house is going on the market. We're outside of a lease now because we chose not to review with all the COVID stuff going on, so we're on a month to month. So the real question here is a week a reasonable time frame for a dishwasher repair? And the answer to that question, in my opinion, is yes. This is not an emergency type situation. It's not a toilet that won't work. It's not a broken furnace. It's not a broken air conditioner if you're in a hot weather climate. It's not a kitchen faucet that's spraying water all over the walls and ceiling and everything else. It's a dishwasher. You can last a week washing your own dishes. Apartments have not had dishwashers for years and years and years in a lot of instances. It's a week. I'm pretty sure the tenants will be able to handle it. Keep in mind, we're also in the middle of a pandemic, at least at the time of this filming, unless you're watching this later. A weak response on a broken dishwasher during the middle of a pandemic is not bad. We're having trouble even getting appliance repair technicians out within, on non-emergency stuff in the Western New York market because there's a labor shortage right now. We're having issues sometimes getting guys out within a week to even give us an assessment. So you're talking about getting the thing repaired within a week. And obviously, it's a little bit different scenario here in Western New York if it's an emergency versus non-emergency. They are prioritizing stuff like that. But it's every service sector right now in Western New York is struggling with the labor pool. And that's why we're starting to see longer timelines for things to get done. It's unfortunate, but it is what it is. We are just kind of dealing with it as it goes. So like I said, if this was a situation where it was a refrigerator, a stove, a furnace, an air conditioner, if you're in a hot weather climate, a house with a single bathroom and that bathroom's not working, those are emergencies. Dishwasher's not going to wash dishes, you can probably scrub some dishes for a week. It's not going to be the end of the world. In terms of compensating the tenants, I probably wouldn't unless they ask for something, and even then I would probably be like, kind of up to you on that one, but it wouldn't be a top priority for me. Move-in checklist. Should the landlord and tenant do the move-in condition checklist together or just have the tenant do it and have them send it over? I'm a brand new landlord. Thank you. We usually do ours a day or two before. And the reason we do that is because we don't want a tenant breathing over our shoulder as we're going through and taking photographs of the apartment, because we take about 150 to 200 photographs on the low end. And people look at me like I'm insane when I say that we take that many photos, but we really do try to capture as much of the apartment or the home as possible. So we're talking about, in the kitchen, we're talking about inside and outside of cabinets. We're talking about countertops. We're talking about the sink. We're talking about the inside and the outside of the appliances, all four sides whenever possible. Or as many sides as the appliance has, all five sides, I guess, if you're talking about the top. Trying to get as many photos as we can, because when it comes time to deal with that security deposit disposition, we want to know what the before and the after condition was so that we can determine what is actually damaged by a tenant and what is actually just normal wear and tear type stuff. So having a good photo set is critical when you're talking about doing these move-ins. That being said, as far as the move-in inspection sheet itself goes, I'll go ahead and pull ours up so that you can take a quick look at it. It's pretty straightforward. It's a rather basic sheet. We've been using this for a lot of years now. One thing I will note is we will oftentimes put additional comments in here If we have more than one bedroom, we'll draw a line down through here to make notes for multiple bedrooms and stuff like that. You can add additional pages to this. You can write on the back of it. More often than not, we'll put notes that are supported by the photographs. So we'll take photos of something and then note it in the report or what have you. But our goal is to have this done before the tenant even shows up for the move-in. At that point, we tell the tenant to walk through the apartment, let us know if they find any damages that need to be added to the sheet, need to be photographed, things like that. We also give the tenant a period of time after they move in. I think it's 5 or 7 days after they move in to report any additional damage that they didn't notice at the time of move-in, but noticed after they moved in. Because you're always going to notice little things. The couple days after you move into an apartment, you're always finding, you're always finding different stuff. What does this light switch go to? Oh, does it go to anything? Oh, this is not working, or whatever the case may be. There's always little stuff at a move-in, so we give them that little window, 5 to 7 days, to report additional damage. And we ask them to send us photos of it so that we can add it to the photo set. But the nice thing is, if you have that good photo set from when you took your photos, then you'll be able to compare it and say, no, this isn't actually what it looked like when you moved in. You caused this damage, or, oh yeah, that was like that when you moved in. It's in my photos too, whatever the case may be. So it definitely helps. It's one of those things, having a ton of photos, people say all the time, is it overkill? And it's not, because when you go to court on a security deposit dispute, you're going to want that evidence to present to the court. And realistically speaking, we settle most of our security deposit disputes outside of court before we even get to that point, simply by being able to show before and after photos to the tenant. It's very easy for us to be able to say, this is what the condition of whatever was when you moved in. This is what the condition was of whatever when you moved out. Obviously, this is not normal wear and tear. This is damage that was caused by you. And most tenants can sit there and look at a couple of photos and agree with what's going on. Some won't. Some will still take you through the ringer and make you go to the small claims court for the security deposit disposition, and it happens. We don't have it happen super frequently, but it does happen occasionally. So something that's worth mentioning, if you're scaling up, if you're above a few doors and you're looking for something a little bit more digital when it comes to doing your inspections, there are several different software packages out there. The one that seems to be leading the way in the property management industry right now is called Z-Inspector. And it operates as a website and an app on your phone so that you can do your inspections. We're actually looking at rolling it out here in our office as well for doing inspections or serving notice or whatever. It keeps a permanent log on the website with dates and times and photos and everything. And you can reference that stuff back for as long as you're a customer of Z-Inspector. So if you have 5 years worth of data, you can reference that 5 years of data through their website just with a couple of quick mouse clicks and things like that. Definitely something to look into if you are at a point where you're scaling up and want something a little bit more digital. I believe they also just rolled out an option to have tenants complete the inspection checklist remotely. So if that is something you're considering, there you go. Now you've got an option there as well. And that pretty much wraps it up for the move-in checklist. I think we covered everything that we... Oh, you know what? There was one other item I wanted to cover on that. Eric over at Rent Prep and I did a video series about how to shoot your photo set back a couple years ago, actually 3 years ago now, according to this. It's a 4-part series. You can find that over on their YouTube page, youtube.com/rentprep. Just do a search for move-in and it'll be the first things that pop up on their channel. You can see there's 4 videos there. Eric and I walk through, I believe this was one of my apartments up in Lockport, New York. We walk through and do a very detailed move-in photo set, and I point out the things that you definitely want to make sure that you're covering when you're doing a move-in photo set. So definitely worth taking a look at that. It's a 4-part series. It's worth its weight. Let's see here, and we'll jump back into our next question. Who keeps the original lease? My tenants are from out of state and have signed the lease and sent me a copy via email with signatures. Do I need them to send me the original with their signatures via snail mail? It doesn't hurt. Even if you're going to do wet ink signatures, then I always recommend having an original copy of the lease. Realistically, what you should do is have them send you 2 original ink copies. You sign both copies and send them back in original ink. But realistically speaking, I'm pretty sure most states at this point will accept digital signatures or scanned signatures. through something like Authentisign, DocuSign, something like that, or just wet ink on paper and then scanning it in. I know New York State's been fine with that for several years now. I think most states at this point are probably on board with digital signatures and scanned signatures as still being the same as an original. You may want to add something into your lease stating that an electronic signature or a copied signature, a scanned signature, is the same for all intents and purposes as a wet ink signature. I know some people do put a clause like that into their lease. You probably don't necessarily need it, but it never hurts to have it. So that pretty much wraps things up for us here today. Thank you all so much for watching. We really do appreciate it. I love producing Ask a Property Manager, and there's a couple of ways that you can help us to improve. You could drop a question either in the comments on Facebook or YouTube, and your question may be picked up in an upcoming episode. Or if you enjoyed this content, if I brought a little bit of value to your day, do me a favor, hit the thumbs up button and share this with somebody who you think might benefit from the knowledge the same way you did. So YouTube and Facebook both push videos based on community feedback. Every like, comment, subscribe, and share helps us to grow and reach more people. We're providing this content on a weekly basis, free of charge to you guys. So the best thing that you can do to help us out is share it so that we can reach more and more people. Next week's episode will be on October 14th at 10 a.m. Eastern Standard Time. We'll be back with another show you won't want to miss. Thank you all so much for watching, and we'll see you next week.